Pablo, good to see you. How you doing? How you been? JP, good to see you. How you doing? T, good to see you. How you doing, brother? How you been? Hi, Miles. How's things? Things are great, obviously. It was a very busy day today. Evening, Miles, the CMF. Joe, good to see you. How you doing? How you been? Good evening, Miles. And CMF, Free Fabric, good to see you. How you doing? How you been? Trying to pin the live before we go. So before we start live. There you go. Pin to your profile. Pin. Okay. Good evening, Miles. How you doing? I'm doing great, Callie. Good to see you. How you doing? Good evening, Miles, the CMF. Manny, good to see you. How you doing? How you been? Hello, Miles. How you doing, boss? I'm doing great. Good to see you as well. Carlos, how you been, brother? Hi, Miles, the family. Alex, good to see you. How you doing? How you been? Callie, good to see you. How you doing? How you been? Okay. Has anyone found the way to buy? Okay, this is just... Richard, good to see you as well. How you doing? How you been? Good evening, Professor Miles and the rest of the family. Good to see you as well, Funky. How you doing? How's things? Hello, Miles, CMF. Good to see you as well, Mickey. How you doing? Okay, let's do intro, disclaimer, what we're going to go through on tonight's live, because some things essentially are happening inside the crypto space that we have to cover on tonight's live show. So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m., long time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. A disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Also, we do Q&As on this live as well, which means if you do have any questions, put it down in the comment section. I'm more than happy to help you out. Now, tonight's live, we're going to be covering topics regarding Bitcoin in terms of essentially what's happening in Texas in terms of Bitcoin, regarding JP Morgan and the MSTR situation that's going on, that the crypto space is actually backing essentially MicroStrategy up to a certain extent. We're also going to talk about the UAE on tonight's live as well, and we're going to talk about some other jurisdictions, for example, like Hong Kong in terms of their crypto regulations. There's a lot of things happening over there, and obviously Ripple news to go from tonight's live as well. The first news we are going to be covering is regarding Texas and Bitcoin. But before we do that, let's go start the comment section first. Let's see what's happening there, and then we'll go straight into the first news. Also, thank you so much to everybody from the CMF who has already smashed the like buttons and smashed the retweet buttons. If you haven't done that, CMF member, smash the like button, smash the retweet buttons. If you're watching this on YouTube and you've already liked the live as well, thank you so much. If you haven't, drop a like on YouTube as well. So let's start inside the comment section first, and then we go straight into the first news. Let's see where we're at. We were at here. Mickey, good to see you. How you doing? Miles, on XRP, on the ETFs for XRP with one is the one that pays dividends, if any do. I think they do, yes. What's cooking today, Miles? A few things that are cooking, essentially. Miles, we had 5 ETFs passed, so when are we likely to see price movements? In a little bit of time, I would have to say. And then there's another one, essentially, for pre-sales. There are some people inside the comment section that are just coming randomly and putting, essentially, pre-sale token, whatever. I'm banning them straight away. We do not promote anything on this live show whatsoever inside the comment sections. And I don't promote anything either, to be famous. My only sponsor is with, essentially, Tangent, which is a legitimate, established code wallet, essentially cold wallet. Nothing else is promoted on this live show for the time being. And hey, Miles, CMF, Comatose, good to see you. How you doing? How you been? Regarding essentially price action on the 5 XRP ETFs, you have to give a little bit of time to mature. Regarding Bitcoin ETFs, when it first passed, it was buy the rumor, sell the news. Nothing much happened. Within the space of a month, then we saw some essentially movements happening in Bitcoin in terms of Bitcoin ETFs. Same scenario for Ethereum ETFs. When they first passed, nothing happened. We gave it a space about a month, and then we saw the price action happening. Same scenario is going to be happening with XRP. Now, Texas is what we're going to talk about first on tonight's live show. Texas becomes the first US state to add Bitcoin to its treasury. It's quite a big step for Texas, to be fairly honest. Texas had made the US financial history by becoming the first state to purchase and also hold Bitcoin in its official treasury, investing $10 million into its newly created Bitcoin Street Reserve essentially today. The buy essentially was expected through BlackRock's IBIT Spot ETF at estimated average prices of essentially $87,000 and above per Bitcoin, marking a landmark essentially moment for state-level digital asset adoption. The reserve essentially is the product of legislation passed earlier essentially this year, which authorized an initial $10 million allocation for Bitcoin purchases through Texas. Lawmakers framed the initiative as forward-thinking strategy to diversify state assets, protect long-term purchasing power, and strengthen Texas in terms of the innovation is bringing towards the table. Although the state used an ETF to complete essentially its first purchase, officials emphasize that this is only the starting point of Texas' footsteps inside the crypto space, so there's a chance that Texas is going to be expanding into a basket of cryptocurrencies through ETFs, most likely. Plans are on the way to eventually move the Bitcoin into direct state-managed custody, allowing Texas to hold assets natively rather than through the fund structure essentially footsteps. The transition is expected to unfold also gradually as infrastructure and regulatory process are put into place. Supporters call the reserve a breakthrough for institutional acceptance of Bitcoin, arguing that Texas is setting a precedent other than states will essentially want to consider to follow Texas' footsteps. The city essentially diversification benefits and Bitcoin's potential as a role essentially in terms of a long-term essentially hedge. Critics, however, point to Bitcoin's price volatility, especially this past month, where Bitcoin has become extremely volatile, but it is seen to be stabilizing in some sort of a way. Texas' decision comes as several other states, including Arizona, New Hampshire, are also actively exploring legislations to create their own Bitcoin or crypto reserves. With Texas now officially holding Bitcoin on its balance sheets, the move may accelerate similar initiatives across the United States in different states. Essentially, this is a major step from Texas to be going towards a Bitcoin ETF to hold it for essentially their own state. It most likely is going to ripple through to other American states to do some sort of similar movements, either a Bitcoin ETF or a alternative ETF. Now, moving on from that, which is incredibly bullish news, to be fairly honest, but the market isn't reflecting that in any sort of a way in terms of price action. Two, banking giants move to take over digital asset custody. Now we're going to talk about Standard Chartered Bank. Standard Chartered Bank has done tremendous work inside the crypto space to expand in terms of the innovation it's bringing towards the table. You could even say other banks might be following Standard Chartered's footsteps. Standard Chartered also has a crypto custody platform called Zodia, who's also essentially a partner of Ripple. So the latest signal essentially came when 21 Shares chose Standard Chartered to safeguard its digital assets, a mandate that pushes one of the world's largest banking groups deeper into the crypto infrastructure. The significance of this deal lies not only in the service essentially provided, but in which type of institution is providing them. Crypto native custodians once essentially dominated digital assets. The sector or essentially rallied on subsidiaries to maintain distance. Now the direction has essentially reserved. Banks are stepping in directly, and crypto native providers are seeing essentially their monopoly erode, which is true. For the longest time, essentially, Crypto.com, 21 Shares, even Grayscale has come out and said that the next clientele, Solid Kraken, that the next clientele entering the crypto space is going to be institutional clientele. And you can technically see that happening when you have essentially Standard Chartered Bank playing a massive role in that direction. Standard Chartered quietly took a different stance this year. Instead of continuing to use subsidiaries to handle digital assets, the bank is now taking essentially custody relationships into its own brand, beginning with 21 Shares. The decision essentially represents a major departure from 2020, when Standard Chartered co-founded Zodia Custody, especially to keep crypto actively structural and separate essentially from its core banking operations. Now it's embedding that operation within its own bank. With 21 Shares previously storing assets with Zodia, the bank's entry into custody raises essentially unanswered questions about whether Zodia will continue to operate in parallel or be replaced over time. Most likely, it's going to be blending into one. None of the companies involved have clarified their long-term structures, fueling speculations that large banks may gradually absorb their essentially market share from specialist firms, they helped create. For 21 Shares, the motivation is not essentially ideological, it's commercial. The company essentially wants custody partners that are conventional institutions, view a familiar, essentially, and dependable its products in terms of their department lead. Mandy said essentially 21 Shares is prioritizing infrastructure that mirrors the standards essentially of traditional security markets, including long-term established risk controls, regulatory essentially custody and global banking compliance. Also, Standard Chartered's recently launched digital asset custody business in Luxembourg and the earlier rollout of its institutional crypto essentially trading desk both fit its pitch. Similar moves are also emerging across the sector. US essentially Bancorp essentially restarted its crypto custody services after pausing during regulatory uncertainty. Citigroup is also evaluating support for crypto custody and payments. Deutsche Bank is also in the process of opening crypto storage to its investment banking clients. These are all indications that the crypto space is, as we most know, essentially, most of us inside the crypto space already understand that crypto is here to stay. There are some essentially people inside the crypto space or even outside the crypto space that may still have uncertainty that is the crypto space here to stay, or is it a bubble just like the AI scenario? But it is here to stay when you have banks and institutions opening up custody services and trying to bring more innovation and connect the banking sector towards the crypto sector. And you can see it, US Bancorp, Citigroup, Deutsche Bank, and the list goes on. The pattern is consistent in terms of once cautious financial giants are now building infrastructure that places them inside digital asset economy rather than just to adjust to it. The trend has sparked debate among long-term crypto participants. Critics argue that the market essentially built on decentralization, it's essentially steadily moving to essentially centralization. Supporters counter that regulated banks essentially will accelerate mainstream adoption, which 100% they will, and also eliminating counterparty risk that historically discouraged conservative investors from entering the crypto space because it seemed like the Wild West. But when you have banks building infrastructure now to enter the crypto space, or previous infrastructure that they had but paused due to uncertainty in terms of regulatory movements and footsteps that are coming out of the US, now continuing forward, it gives us that bullish sign. The disagreement intensified when BlackRock confirmed more than $3 billion worth of Bitcoin had already been converted into ETF forms. Also, with clients increasingly choosing to hold exposure inside the normal, essentially, banking and wealth management channels rather than self-custody. The Standard Chartered 21 Shares partnership is not simply another custody contract. It reflects a turning point inside of digital asset industries, one where essentially traditional finance is no longer watching crypto, and infrastructure grows but actively taking control of it. Whether crypto-native custodians remain central or become overshadowed by some sort of a hinge on how many institutions follow the same path in the coming year. Let's just be honest with ourselves. We went through a month of essentially crypto going on a downtrend, and most people thought we're done for. It's a bubble burst that's happening inside the crypto space. At the same time, we had a massive, essentially, inflow in terms of CBDC, essentially infrastructure that was being built, and the same of crypto was dropping, if anybody saw the charts. At the exact same time, the banks are turning back on their essentially crypto infrastructure and trying to fast forward in that essentially direction, coming out of a month of crypto downtrends. Also, at the same time, we had essentially massive inflows coming in as well from the ETF side. This entire month that we had a massive downtrend was completely coordinated and completely manipulated. Now, moving on essentially from that to Stellar. But before we talk about Stellar, let's go inside the comment section first. And it's been a while since we talked about XLM essentially on this live show as well. So let's go inside the comment section first before we do go through the next news on tonight's live. Again, there are people inside the comment section putting, did you sell your seed phrases or earn essentially this? Some people promoting some sort of a weird crypto project inside the comment section. I'm blocking them one by one. But if you are seeing their comments, these are not genuine people. These are bots promoting some sort of a weird crypto project. Please do not fall for it inside the comment section. Everybody else inside the comment section is completely genuine. Just a few morons that I just blocked. Now, hey, Miles and CMF, good to see you as well, commenters. How you doing? What up, Miles and CMF? Let's go, Texas. Let's go, Ray. How you doing, brother? Evening, Miles and CMF. Jason, good to see you as well. How you doing? Morning, Miles and CMF. Shelly, good to see you as well. How you doing, Shelly? How you been? Hello, Miles and CMF family members. Scott, good to see you as well, brother. How you doing? Share the live. Let's go, Scott. Now, XLM. It's a crypto project that I believe it's a must-have inside of your crypto portfolios. Not financial advice whatsoever. But in my point of view, it's a must-have alongside XRP and XDC. So A US bank begins testing its own stablecoin on Stellar's network. That is a massive deal. US Bank is stepping deeper into digital asset innovations with a new pilot program testing the issuance of a bank-grade stablecoin on the Stellar blockchain. Conducted essentially in collaboration with PwC and Stellar Development Foundation, the initiative marks one of the most significant moves yet by a major US bank in terms of financial institutions towards programmable on-chain money. The pilot examines how traditional, essentially systematic or important banks could essentially be in terms of safeguarding essentially people's assets. Also, the issue is own stablecoin on a public network, something that has long been considered a technical and regulatory challenge for US banks that aims in terms of to determine how a fully regulated institution might leverage blockchain for faster payments, tokenized settlements, and improve transfer workflows. In other words, this bank moving forward using Stellar's network for stablecoins could lead to essentially Stellar and tokenization through this bank. US banks selected Stellar essentially especially for its asset freezing and transaction reversal capabilities. According to essentially Mike, the head of digital asset products at US Bank Corp, these features provide essential safeguards for institutions that must consider compliance, error corrections, and recovery procedures long before deploying on-chain money at scale. This essentially makes Stellar particularly attractive for banks experimenting with controlled programmable digital dollars. The pilot comes at a time where more traditional financial institutions are evaluating blockchain infrastructure for real-world use cases. From settlement to corporate payments to cross-border transfers, a US bank-issued stablecoin would also represent a major milestone in that trend, signaling that programmable digital money is moving from concept to practical implementation. Now, by testing a live stablecoin essentially on Stellar, the bank is exploring how blockchain could integrate directly into its core financial operations. As the pilot evolves, it could lay the groundwork for a future in which major US banks issue their own on-chain essentially stablecoins, bringing programmable money into mainstream finance. This idea of essentially this US Bank Corp going on Stellar's network, doing some sort of testings to bring out a stablecoin is a brilliant idea in terms of essentially banks connecting to Stellar's network. I love it. One major issue. I just don't want every bank inside of the United States or around the world to be creating their own stablecoins, because that will just create confusion for everybody, to be fairly honest. Hong Kong put it best. We don't need essentially 25 different versions of a stablecoin for British pounds, digital dollars, and euros. We need 4 or 5 stablecoins for each currency, and we're pretty much good to go. We don't need 25 or 50 different versions of the US dollars. It's just creates too much confusion for essentially the market space. But this particular news for Stellar is brilliant in my point of view, because Stellar hasn't been doing much, but it is an excellent project, to be fairly honest. Excellent project. So I'm very happy for Stellar, to be fairly honest. Now, Alibaba is what we're going to talk about next on tonight's live. Now, the reason why we're going to be talking about Alibaba, it's due to the AI bubble burst situation regarding the bet Michael Burry put down in terms of we're essentially coming up to some sort of an AI bubble burst. If that does happen, obviously crypto will be affected because Bitcoin will be affected because it follows tech stocks, and then the rest of crypto space will be affected. However, if we have a Clarity Act in place, we have utility happening, then certain crypto projects won't be impacted by an AI bubble burst scenario and others will. Unfortunately, we don't have a Clarity Act yet, but Alibaba's CEO dismisses an AI bubble fear for another 3 years. So, Alibaba's CEO, essentially Eddie, no AI bubble is expected within the next 3 years, according to his point of view. This is essentially backed by a consistent demand for AI infrastructure and solid investment returns, which is true. Yesterday, I shared news regarding Amazon investing over $50 billion, making the announcement of investing over $50 billion for AI data centers. The infrastructure and solid investment returns, as stated in leadership commentary during recent earnings calls and developer conferences. Alibaba's announcement highlights confidence in AI's growth and trajectory, with Eddie essentially stating that customer demand and paid usage are fueling infrastructure expansion, and contrary to avoiding also potential speculative bubbles. Alibaba is moving forward with substantial AI and cold essentially investments. Eddie, also current CEO, emphasized that robust demand, stating the industry's development speed far essentially exceeds what we expected, and that the industry demand for AI infrastructure also far exceeded our anticipation. This sentiment aligns with essentially the president of Alibaba, who remarked on the certainty of AI essentially demand growth happening, not what Michael Burry suggested, an AI bubble burst. Eddie also confirmed Alibaba's position as a full-stack AI service provider engaged in significant investment cycles. Daniel, the former CEO, also spoke of essentially backlogging in AI servers and deployments, underscoring growing industry needs and current plans. Also, the immediate impact essentially reflects strong institutional confidence towards the AI space, which is good. As I said, the AI space will affect tech stocks will affect Bitcoin will affect the rest of the crypto space. So no AI bubble burst is good for us inside the crypto space. From an economic perspective, Alibaba's investment is the largest in China's tech private sector. Observations show that the viable returns on these investments supporting ongoing high capacities and commitments without speculative undertones. The conditions for a speculative bubble do not present Alibaba's projects and rapidly falling demand gaps over AI resources. Ultimately, Alibaba's streak focus reflects the overall state of technological adoption in China, with consistent customer essentially pre-orders and infrastructure constraints, signaling a distant difference from previous tech investment cycles. Since Michael Burry put a bet down that we're going towards an AI bubble burst, there's been tremendous amount of investments in AI. We're talking billions here. Just yesterday, as I said, Amazon $50 billion investments. So far, everybody's betting against Michael Burry. Are we going to have a 2008 situation by the looks of it? No, but it is one outcome. Now, moving on essentially from what China's largest AI infrastructure thinks to the CFTC. The CFTC, Caroline Pham, essentially launches a CEO Innovation Council to shape the US crypto policy. Since Trump has become president, the SEC, the CFTC, the OCC, the FDIC, and the list goes on, they're all pro-crypto, and they're all positive towards the crypto sector, and also bringing so much innovation towards us. Now, what the CFTC is introducing, in my point of view, is brilliant. Getting essentially opinion from CEOs of blockchain firms to shape in terms of regulatory movements going forward is what we need. Caroline D. Pham, serving as the acting chair of the CFTC, because the current CFTC chairman is still going process of being chosen to be the chairman of the CFTC, is creating a new CEO Innovation Council designed to advise the agency on digital asset policy as the US shifts towards a more coordinated pro-innovation, essentially crypto space, announced as a part of a broader federal crypto sprint, they're calling it. The council represents one of the most significant structural updates to the CFTC's approach since the beginning of the year. The goal of essentially the CEO Innovation Council is to guide the CFTC through emerging market structures, including crypto trading, tokenized collateral, and prediction markets, and help shape the next generation of the US digital asset rules. Pham is also active. Sorry about that. Sorry about that, everyone. Pham is actively soliciting nominations from company leaders from submissions open through December 8th, 2025. The council's formation follows essentially a clear policy shift in September. The CFTC and SEC issued a rare essentially judgment in terms of the jurisdictional friction over crypto markets. The statement also clarified that regulatory exchanges are not restricted from listing spot crypto products, an announcement widely seen essentially as a pivotal regulatory breakthrough. These are all extremely bullish news, but yet again, it's not being shown in terms of price action on the crypto space. The new CEO essentially council sits within a wider essentially modernization effort aimed at updating how US financial regulators interact with blockchain markets. The CFTC's current priorities essentially include establishing guardrails for listed spot crypto trading, enabling tokenized collateral and stablecoin use in derivative markets, introducing technical amendments to CFTC rules to allow broader essentially blockchain adoption. This integrated approach contrasts essentially sharply with the more enforcement-driven essentially stance under the former essentially chair Rostam Benham, who stepped down in January 2025. Under Pham, the CFTC is embracing a more open, innovation-first philosophy that aligns closely with the administration's broader digital asset strategy. By involving essentially CEOs directly in the policymaking process, the CFTC signaled a shift towards a regulatory participants as partners rather than advisories. The CEO Innovation Council is set to become a key form of shaping how prediction markets, tokenization platforms, stablecoin systems, and digital trading venues operate within the US oversight. Its launch essentially marks a defining moment in the transition from regulatory turf battles to a more unified vision of how digital assets fit into the nation's financial essentially architecture. A growing suite of enterprise solutions and expanding global market networks, Ripple is now building robust, independent also revenue streams that don't rely on XRP reserves whatsoever. A shift that fundamentally rewrites the entire narrative. So, regarding essentially the crypto market space in terms of what the CFTC is trying to do, bring essentially, get some opinions, create some sort of a CEO innovation essentially department in the CFTC to get some sort of opinions in, so that CFTCs essentially knows what their next steps are inside the crypto space, I think is a genius idea. Because people inside the CFTC need to be more educated essentially on the blockchain space, and who best to teach them regarding getting insights from CEOs or getting insights from the crypto sector in general to move forward. Now, again, all of this is extremely bullish, but yet it's not being shown on the crypto side in terms of price action. I wonder why. Because it's very, very manipulated. Because we don't have a Clarity Act, they can do pretty much what they want towards the crypto space. The moment we get a Clarity Act, we get utility, manipulation will essentially be considerably less, especially for a lot of crypto projects out there. Now, MSTR is what we're going to talk about next on tonight's live. But before we talk about MSTR, let's go inside the comment section first. That's what's happening there. As I previously, this is live, which means if you have any questions, put it down in the comment section. More than happy to help you out. So, let's see where we are inside the comment section. We were here? I think so, yeah. Good evening, Miles and CMF. Mike, good to see you. So how you doing, brother? How you doing? Well, hello. Good to see you as well. XRP, how you doing? What are these extra numbers and characters at the end of our family members' names? I think it's just YouTube doing it, to be fairly honest. Now, MSTR and JP Morgan. Apparently, there's a feud going on right now. JP Morgan is shorting essentially MSTR stocks, and the crypto space, well, the Bitcoin maxis are not happy. To be fairly honest, again, we don't have a Clarity Act, so if Bitcoin goes down, we all go down with it. And JP Morgan is betting against MSTR, which isn't going to play out good for any of us. Again, if we had a Clarity Act, I couldn't care less what happens to MSTR or Bitcoin, because if we had a Clarity Act, Bitcoin, essentially XRP, XLM, XDC, HBAR, AVAX, Solana, they will all be decoupling from Bitcoin's footsteps going towards utility. Unfortunately, we don't have a Clarity Act, which means whatever happens to Bitcoin happens to us, which is JP Morgan trying to short MSTR stock. And the crypto space is not standing for it. So think of it as a GameStop situation right now. MSTR stock, the trading symbol for strategy, essentially closed at $170.50. Essentially capping a brutal month that saw shares drop 43% aimed to Bitcoin's 30% slide from its essentially yearly high. Rumors exploded essentially on X, alleging JP Morgan Chase that holds a massive short position on MSTR, potentially vulnerable to essentially a 50% rally that could force GameStop-style squeeze and wipe out billions in gains. The crypto space, in other words, is standing up to JP Morgan. These claims, amplified by Bitcoin advocates like essentially Max Heiser, concede with a broader backlash against the bank, including reports of thousands closing accounts in protest against JP Morgan Bank. While unverified, the chatter is reignited essentially debate on Strategy's role as a leveraged Bitcoin proxy, with a short essentially interest at 9.74% as of essentially November 15th, per Nasdaq essentially data, far below essentially GameStop's 140% peak in 2021, but enough to fuel speculation if retail piles in. Whispers of JP Morgan alleged short essentially on MSTR stocks resurfaced promptly on November 23rd, 2025, via ex-post influencers. This narrative gained traction in JP Morgan's public warning. The bank's analysts flagged risk of exclusion of MSTR essentially stock from the MS essentially CI equity indices, estimating up to essentially $2.8 billion in forced selling by passive funds if reclassified as a fund rather than a company. Short interest stood at 25.28 million shares, down slightly essentially from 25.37 million, essentially 2 weeks prior, according to also the market bear bi-weekly update. Borrow fees for MSTR stock hovered at around 1.5% per essentially Fintel data updated, indicating a steady but not extreme demand from shorts. The community reaction turned essentially fiery. The vulnerability in MicroStrategy stock ties directly its status to essentially in terms of digital asset treasuries debt. Essentially, this makes MSTR stock a high beta play on BTC, with shares also trading at a 1.16 essentially x net asset value multiple, the lowest essentially in the cycle according to JP Morgan's analysis. The index also essentially is a threat. Look, to be fairly honest, what's happening to essentially in terms of MSTR stock and MicroStrategy is bad for the entire crypto space. Again, because we don't have a Clarity Act. If we did have a Clarity Act, I couldn't care less what happens to MSTR stocks. And I'll be fairly honest. But because we don't have a Clarity Act, we're stuck behind Bitcoin for the time being. The crypto space is rallying up in terms of essentially going for MSTR stocks, just like they did back in the day regarding GameStop and going against Wall Street, but this time it's JP Morgan. And there has been essentially, for example, yet Arizona's pension funds backed the trend, scooping up $50 million in MSTR stock. This is catching on right now. In terms of, there are companies now also buying MSTR stocks, backing essentially the retail section or the crypto section, you could pretty much say. So let's see what happens. Is JP Morgan going to win this essentially scenario, or is MSTR stock going to become victorious on the other side of the spectrum? For the time being, it's essentially a battle that's going on, MSTR versus JP Morgan. Now, on the topic essentially of JP Morgan is about to be introducing a very interesting new concept, especially that JP Morgan is a bank and they're introducing something similar to Polymarket, which is where you bet on crypto, you bet on politics, you can pretty much bet on anything you want on Polymarket. And JP Morgan is about to be introducing something similar to that, but they're starting with Bitcoin. JP Morgan is going to be rolling out a complex, new structured note designed for investors who want to bet on very specific Bitcoin price paths. One where essentially BlackRock Bitcoin ETF's IBIT declines over the next year, then rebounds sharply by late 2028. The essential bank filed essentially this with the SEC, marking one of Wall Street's most unconventional crypto-linked investment products. The note gives investors exposure to two scenarios: short-term decline, enhanced upside potential without a formal cap if IBIT drops during the first year, or long-term essential recovery in terms of strong upside if IBIT later rallies into December 2028 when the note essentially matures. The structure is designed for investors who believe Bitcoin could face near-term pressure but will ultimately appreciate over the multi-year essentially horizon. The note also includes a pricing data around essentially December 15, 2025, an initial one-year essentially review window, and a final maturity in December 2028, according to the filing. The product involves two key payout mechanisms: auto-call scenarios. If essentially IBIT trade above a certain threshold on the first review date, the note essentially terminates early. Investors receive a minimum fixed return of 16% regardless of the broader market conditions. In the upside scenario, if the note is not called essentially after 1 year, returns become essentially linked to IBIT's performance through 2028. There is no upside cap, essentially allowing for significant appreciation if the ETF recovers strongly. However, the downside is substantial. A prolonged drop in IBIT could wipe out also large portions or even essentially all of the investors' principals. So if you are somebody that's quite big on the idea of Polymarket, betting on the crypto market space rather than futures trading or going for spot, and you just want to bet on something's future, well, JP Morgan is about to be introducing a platform like Polymarket, but starting with betting on Bitcoin's future. It is quite unnormal for a bank to be doing this, or a bank as essentially like JP Morgan to be offering this service. And also on the topic of Bitcoin, there was also something released on X which infuriated Bitcoin maxis, which was that Bitcoin has achieved what it needed to achieve, and there's no more room for growth. And what that essay essentially was, an essay that was released in terms of Bitcoin's footsteps, and that Bitcoin has achieved everything it wanted to do. There's no more room for Bitcoin's growth, mainly because Bitcoin has no utility. The essay suggested that Bitcoin has no utility and its only purpose ever was to disrupt the financial markets. And it has achieved that because Bitcoin has, for a fact, disrupted the world's financial markets. And that was its core purpose. But it really never had any sort of utility. Yes, the utility day one was an alternative digital currency. But let's be honest, the world's not going to be using, essentially, in terms of everybody or every bank, every institution, every retail member is not going to be using Bitcoin in terms of transactions. They're better off using alternatives like XRP, XLM, XDC, HBAR, essentially even Solana. Because they're, even Ethereum is essentially blockchain in terms of what projects are built on it. Because it doesn't essentially offer much room for in terms of the financial sector or the tokenization sector, because it's not a great chain to build on. Many companies have tried to build on essentially Bitcoin's chain. It wasn't too successful. And some have lied about their success, to be fairly honest as well. And I've talked about Binance, for example, trying to launch NFTs on the Bitcoin network a long time ago. They tried it for 2 months and closed the entire operation down because they found out it's essentially disrupted Bitcoin's chain. It's making congested just by using NFTs on it. Never mind tokenization or the financial backbone of the essentially financial sector of the world. So what this essay suggested has truth to it. Bitcoin's main purpose was to disrupt the financial sector, and it has achieved that. But I think personally now it's time for other projects that have real utility use cases to essentially take the torch from Bitcoin. Not saying Bitcoin is going to go to zero in any sort of way and completely disappear, wiped off the surface of the earth in any sort of a way. Bitcoin could always be used as some sort of a foundation built for some people. But in terms of finance, Web3, tokenizations, AI, it's not really the best chain. And even Bitcoin maxis will tell you that, as much as it pains them to say it. Now, moving on from what the essay was essentially released on X to the UAE. The UAE regulates the DeFi and Web3 space under new 2025 laws. So, the United Arab Emirates, the UAE, has taken a major step towards regulating the digital asset space. The country essentially officially enacted federal decree number 6 of 2025, bringing DeFi platforms, Web3 protocols, stablecoins, decentralized exchanges, and cross-chain bridges under the oversight of the UAE Central Bank, which is an interesting maneuver, because in the US you would have the SEC and the CFTC deciding in terms of the regulations. In the UK you would have the the Financial Conduct Authority. In Singapore you would have the SFC, and the list goes on. In Japan you would have the FSA, for example. But the UAE decided to put all of that regulatory power in the central bank of the UAE. This sweeping law means that all relative crypto projects operating in the UAE will need to secure an official licensing by September 2026. This is why I say crypto projects that have licensing are going to be essentially much more further ahead than crypto projects that promise something that really can't deliver it. There's a lot of crypto projects out there that will try to compete and even say they are better, for example, than XRP. There's a lot of financial projects out there. There's new projects coming out saying they're better than XRP or XLM or XDC or HBAR. At the end of the day, you've got to realize the market space we're in. We're not in the market space of who can bluff the best. We're inside the market space of who's got the correct licensing. Because that's all that matters at the end of the day. Who's got licensing to operate? If you don't have licensing, or if you can't get the correct licensing, then essentially whatever that crypto project is giving out, can't do much about it because it doesn't have the correct licensing. So the UAE made it simple. You want to operate as a crypto project in the UAE, you got to have a license. No license, no operations. The sweeping law means that all relative crypto projects operating in UAE will need licensing, or risk being shut down or even banned from operating in the region. It marks essentially one of the most comprehensive crypto regulatory frameworks introduced globally so far. Under this decree, essentially, UAE is making it clear that non-custodial finance is no longer a regulatory gray area. The UAE is closing down the gray area. They want the crypto space to be a mature space. which is exactly what we want inside the crypto space. The more we go towards that angle of essentially a mature crypto space and walk away from the gray areas, there'll be less manipulation inside the crypto space. I think everybody is tired of essentially one, following Bitcoin's footsteps because we don't have the right regulatory power. Those are the Clarity Act that we need. We should have got because of a government shutdown. We didn't get because the Democrats decided to waste everybody's time. And at the end, still agreed to Trump. So I think everybody inside the crypto space should be on that side of, yes, we need more regulations. We need to close down the gray areas and close down the manipulation. Not saying there's going to be zero manipulation. There'll be some, but not at the extent, not at the level that we have now. So decentralized finance protocols such as lending, borrowing, and trading platforms, Web3 application including DAOs and tokenized ecosystems, stablecoin issuers, decentralized exchanges, and agriculture, essentially blockchain bridges that move assets across chains. By bringing essentially these under the central bank's jurisdiction, the UAE is pushing for a greater transparency, anti-money laundering, such as AML compliances, and user protection, all while encouraging responsible innovation inside the region. This move solidifies the UAE's position as a forward-thinking crypto hub that balances innovation with oversight. Unlike other regions essentially that rely on fragmented or unclear rules, the UAE essentially is offering a clear path forward, innovate, but under a licensed framework. So if you look at which crypto projects have the most amount of licensings in terms of the UAE, it's Ripple. Ripple has the most amount of licensings, not just in the UAE, but on a worldwide basis. Let me essentially put it to you simple. I have a friend who works inside the banking sector. Again, I'm not going to be naming who he is or which bank he works for because I don't want to put his job essentially at jeopardy. Sometimes he essentially gives me information on what's happening in the banking sector. Nothing like inside information that could collapse the bank, essentially that I should know in terms of what I should be trading on. But things like where the bank's next footsteps could possibly be going towards or what the banks are essentially thinking right now. And he let me know that regarding essentially the AI bubble situation that's happening, that the AI bubble might burst. I said, where do you think essentially, in terms of an AI bubble burst happens, what do you think is going to be happening next? He said, well, there's only going to be one clear winner in terms of the AI space. I said, who do you think is going to be the clear winner inside the AI space? And he said, Grok. He said, Elon Musk is what you want to bet on if there is an AI bubble burst. I said, okay, let's do the same scenario for the crypto sector. Let's say an AI bubble burst happens. Crypto sector is also essentially impacted by that scenario. And let's do the same theory. Who do you think is going to survive in the crypto sector? Because for the longest time, everybody inside the crypto space has talked about 99% of crypto projects will go away and 1% will only survive. That's being used. That same paragraph or sentence has been used by Ripple's own CEO. It's been used by essentially CZ, Brian Armstrong. The list goes on regarding the crypto CEOs. They've all used the same sentence. 99% of crypto projects will go away. 1% will survive. So I asked my banking friend, you think, essentially Elon Musk is the safe bet in a crypto world? Because essentially AI does the exact same thing. All AI projects do the exact same thing. There could only be honestly one clear winner and 2 to 3 alongside it. And his bet essentially is on Elon Musk. I said, okay, for the crypto space, who do you think is the clear winner? He said, the crypto project that has the most amount of licensings is going to be the clear winner in terms of every category. So if it's an AI crypto project, then the crypto project has the most amount of essential licensings will be the one that will be moving forward the furthest. In terms of Web3, same scenario. And in terms of finance, he said it's Ripple. Now, just to put in perspective, he hates crypto. The banking friend that I have, that I grew up with and works for one of the biggest banks in the United Kingdom, he hates crypto because it has that banker mindset. For someone like him, he's saying to me that he sees, even though he hates crypto, that Ripple is the clear winner because of licensing. Because while other crypto projects were trying to get developers on their blockchain, Ripple was going out and getting licensing around the world. They got multiple licenses in Singapore, Hong Kong, the UAE, Qatar, Bahrain. I mean, the list goes on in terms of how much licensing essentially Ripple applied for. And he said one other advantage essentially is what Ripple has, which is that Ripple is applying for essentially a banking license, also a skinny Fed account now, you could pretty much say. And that's a big advantage for Ripple that the others cannot achieve. He said Bitcoin can't go out and get a banking license because there's no foundation behind it. In other words, no company behind it. Ethereum can't go and apply for a banking charter license, can't go and apply for a Twitter account, but Ripple can. Solana Foundation can't go out and get essentially a banking charter license because it's just a foundation. Stellar Foundation can't go out and get a banking charter license or a Fed Master account. AVAX can't get one. HBAR can't get one. Do you see where I'm going with this? But Ripple can, because it's a private company. And he said that is why essentially going forward, Ripple is the clear winner going forward. Because Ripple can achieve things that the other projects cannot achieve inside the crypto sector. And one of them being becoming a bank, rivaling JP Morgan, according to also that CEO of essentially the Wall Street CEO that we talked about yesterday. There are things that Ripple can achieve to advance the XRP ledger on the financial sector, where other blockchain projects cannot achieve. Ethereum can't apply for a Fed Master account. Bitcoin can't apply for a Fed Master account or essentially a banking charter license. Neither can Solana, neither can AVAX, neither can HBAR, neither can essentially XLM, neither can XDC, and the list goes on. Yes, they can be used by the banking sector. No doubt about it. They can be used by the banking sector. They can be developed on, but they cannot achieve the things that Ripple is going to be achieving, which just puts them in separate categories. And this is why I've always said Ripple, XRP here, in terms of the financial sector, everything else is here in terms of the financial sector when it comes to the crypto sector in general. And everybody hates on Ripple, the Ripple haters hate on Ripple essentially because they hate on XRP because Ripple's a private company abusing the XRP ledger. By the looks of it, Ripple's the one advancing the XRP ledger, while the rest can't do the same thing. And when everybody else got more developers on their chain, more meme coins on their chain, Ripple was going around collecting licensing, essentially purchasing out companies, doing acquisitions. So this is why essentially Ripple and the XRP ledger are miles, and I'm talking about miles ahead of the rest of the crypto space. Essentially inside the financial sector, Ripple and XRP ledger are miles ahead. Now, Canada is what we're going to talk about next. Moving off the UAE in terms of their regulatory footsteps, Canada has just approved its first ever compliant Canadian stablecoin. Stablecoin Corp Inc. has launched essentially Canada's first compliant CAD stablecoin, QCAD, after receiving a final approval from Canadian securities regulators on November 24th, 2025. QCAD's approval sets a precedent for regulated digital currencies, enhancing innovation and regulatory compliance in Canada, potentially influencing essentially future fiat-backed stablecoin developments globally. QCAD has become Canada's essentially compliant CAD stablecoin, receiving final regulatory consent from Jean, the Stablecoin Corp chair, emphasized today. From day one, our mission was not to take the easy route, but the right one, because that's what matters, regulatory footsteps. This approval is not essentially just victory for essentially Stablecorp. It is a defining moment for Canada. Stablecoin Corp, essentially QCAD compliance with local rules, highlights the collaborative role of Stablecoin essentially Corp and regulators. The regulatory green light underscores a pivotal moment for Canada in terms of the footsteps it's taking inside the financial sector. According to CoinMarketCap, the QCAD token has yet to see significant market activity so far, with its fully diluted market cap of roughly about $1 million and no active trading so far or market dominance. Research suggests that QCAD may establish itself as a foundation essentially in future Canadian Web3 projects. Regulatory progress is likely to increase adoption of fiat-backed assets, propelling broader Canadian market integrations and fostering DeFi protocol enhancements through traditional financial backing. The path essentially paved by QCAD could define Canada's digital asset policies. So, Canada has been quite slow inside the crypto space. So I think, this is a big footstep, a humongous footstep for Canada to be approving the first ever Canadian stablecoin. Now, this isn't a government stablecoin. It's just the first ever stablecoin Canada has approved. Moving off, essentially the UAE, Canada, and now to Hong Kong. Before we talk about Hong Kong, let's go to the comment section first. Let's see what's happening there. As I said previously, this is live, which means if you do have any questions or comments, put it outside the comment section. More than happy to help you out. So let's see where we were at. So the comment section, we were at here, I think. Hi, Miles, the CMF. Stormy, good to see you. How you doing, Stormy? How you been? Share the live. Scott, let's go. Crypto space at the moment is a complete mafia. I agree. Let's go, Miles. Keep up the good work. Your worthiness is paying off our group family. Let's go, Scott. You make a good point. Miles, thanks for paying off. Thank you so much, Scott. Miles, any information on XDC? So far, none. Any information on HOT, also not, but I could take a look at them, and tomorrow I can maybe find some news on them. XRP, XDC, XLM, HBAR, HOT, let's go facts. Words of truth, let's go country. Share the live, let's go Scott, let's go Miles, let's go Scott. XRP and XLM. All the way for me personally, what essentially beach are we meeting on? Sardinia essentially is where we're meeting at. It used to be cash is king. It's now XRP is king. I agree with that statement 1,000,000,000%. It definitely used to be cash is king. It's definitely now XRP is king. How awesome it would be to park all my XRP in a Ripple bank, collecting interest or investing, or essentially lending against it. I feel more secure using Ripple than most of the current sites. 100% I agree with that as well. The moment Ripple gets a banking trial license and also a Fed account and opens its doors to the retail section, Ripple is the only place I would even suggest to anyone around me, not financial advice whatsoever, that it's the safest place to keep your XRP, with Ripple themselves. The creator of BTC has gone AWOL, so who can apply for a banking license? Nobody, by the looks of it. I think it's time for Michael Saylor to sell his Bitcoin and acquire some XRP, and also Ripple should help BTC and MSTR to liquidate JP Morgan. I agree. Honestly, regarding liquidating JP Morgan is actually a good play because it works in the favor of Ripple and XRP, to be fairly honest. So I like that. Like and repost, guys. Facts. If you haven't smashed the like buttons or retweet buttons on this live when you're watching this on X or on YouTube, I don't know why. Smash the like buttons and smash the retweet buttons, same with members and anybody else that's watching right now. So, Hong Kong is what we're going to talk about next on tonight's live. Not only is the UAE finalizing essentially its crypto regulations, Hong Kong has also decided to finalize its essentially regulations for the crypto space as well. Actually, the CEO of Hong Kong Securities and Futures Commission announced today the nearing of essentially completion of regulatory frameworks for digital asset trading and custody services, reinforcing Hong Kong's crypto market essentially ambition. These regulations aim to support a robust digital asset ecosystem with $3 billion essentially in tokenized products, positioning Hong Kong as a leader in compliant digital finance. Hong Kong is finalizing regulatory frameworks for digital asset trading, custody, and actually essentially the CEO of Securities and Futures Commission, the SFC, confirmed that these actions will complete the city's comprehensive regulatory structure. The essentially adoption of tokenized financial products in the region is increasing, with a market size essentially estimated $3 billion. Digital platforms offering trading or custody services will now require a SFC license. The same thing that the UAE is doing. If you have a license, you can operate as a crypto project. If there's no license, you cannot operate and it can be banned. Same thing is happening in Hong Kong. You have to apply for a crypto license. You don't get one, you can't operate as a crypto project. I like this. This is where the world should be heading, because you know what this will do? If every jurisdiction follows essentially UAE's footsteps and Hong Kong's footsteps, which most likely they will, it means that we're going to be filtering out the crypto space of which projects actually can provide the utility they say due to the licenses they have, and which projects inside the crypto space have just been bluffing all this time on what they can actually achieve because they don't even have licenses to go forward. This updated regulation mandates essentially insurance for digital asset custody as well, and segregation of client assets. Non-compliance will subject the platforms to penalties. With these requirements, Hong Kong aims to enhance investor protection and market integrity. The combined effect essentially of the new policies to allow the SFC to regulate the management or distribution of virtual asset funds so that investors' in essential interests would be protected either in terms of fund management level or at the distribution level, or even both, said Ashley, the CEO, essentially the executive, essentially chief executive officer at the SFC. Government officials and industry participants have expressed positivity towards these changes. Local entities praised the regulatory clarity, expected to entice more institutional investors now, because we're moving away from grey areas. Research teams suggest that these regulations could bolster Hong Kong standing in the digital financial space. With strict compliance measures and the increase of tokenized products, Hong Kong may attract diverse investments, fueling growth in the global crypto economy. Now, moving on from Hong Kong, which is brilliant news, to Trump. The war regarding Ukraine might be coming to an end, according to Trump, which could actually play out brilliantly for the crypto space as well, because we don't want geopolitical tensions, even though essentially Bitcoin essentially is not supposed to be affected by geopolitical tensions or macroeconomic events because it's digital gold. There's a risk-off asset. Unfortunately, Bitcoin is more like a risk-on asset, and I think it's been proven this month especially. But regarding the Trump situation, today brought a significant update. Ukraine has reportedly accepted a peace agreement. Former President Donald Trump announced this development on social media, suggesting that the end of the war to conflict is near. The essentially cessation of the war is expected to lower oil prices, stabilize inflation, and encourage the Federal Reserve to consider more aggressive interest rate reductions. Furthermore, the reduction essentially in geopolitical tensions will likely foster growth in risk markets. The situation for cryptocurrencies in 2022 was notably challenging, marked by the commitment of interest rate hikes. In contrast, in 2026 appears poised to begin with monetary expansions. Given that the war essentially initiated in 2022, its potential conclusion in 2026 represents a turning point. Trump recently shared the following message through his social media account. Over the past week, my team has made substantial progress in efforts to end the war between Russia and Ukraine, a war that would never have started if I were president. Last month alone, 25,000 soldiers lost their lives. The United States crafted a 28-point peace plan, refined collectively essentially by both parties, with only a few remaining points of essentially contention. Now, in hopes of finalizing this peace plan, I've instructed my special envoy, Steve Witkoff, to meet with the president, essentially Putin, in Moscow. And essentially simultaneously, Dan also will engage in talks with the Ukrainians. I will continue to be briefed by Vice President J.D. Vance, Secretary of State Mark Rubio, and Secretary of War Pete, with the White House essentially Chief of Staff Susie Wills essentially on all progress. I hope to meet President Zelensky and Putin soon, but only once a final agreement to the end of this war essentially is either concluded or in the final stages. Thank you for your interest in this crucial issue. Let us all hope for peace to be achieved as soon as possible. Therefore, the upcoming talks between Putin and Trump seem essentially likely to lead to the final peace. Just as the war in 2022 caused a downturn, it is hoped that peace will now bring about the upswings. So, if this scenario section does play out regarding the Ukraine war situation finally ends, it'll be a weight has lifted from the market space, honestly. No wars is what we need, technically, for the crypto space, for the stock market, for everything to stabilize and go on the upsides. Now, moving on from that to the Ripple news, the XRP news on tonight's live. So, regarding the essay that I essentially mentioned on this live show, regarding essentially Bitcoin has already achieved what it needs to achieve, which was to disrupt the financial markets, which it did that. There's nothing else essentially left for Bitcoin to achieve, to be fairly honest. But for the rest of the crypto space, in terms of the crypto projects that have the licensings, there's a lot to still be achieved. And that Bitcoin, in my point of view, needs to pass the torch on. I'm not the only one that thinks this. Ripple's CTO, for example. Ripple's Bitcoin cannot win alone. Ripple's CTO explains why XRP is built for global financial dominance. The debate over which digital asset will anchor the future of global essentially finance has persisted for more than a decade. Yet Ripple's chief technology officer David Schwartz recently sat down with Ella Terrett, who highlighted essentially on X that with many industry analysts now call for one of the most revealing XRP interviews of the year. In the discussions, David Schwartz challenged the long-standing belief that Bitcoin can dominate global finance on its own. He essentially argued that no single blockchain can essentially shoulder the demands of modern payment systems. Instead, he said the industry's success will depend on multiple networks working together rather than one chain claiming absolute dominance, which I agree with 100%. Schwartz explained that early Bitcoin essential tribalism discouraged experimentation and slowed the industry progress. However, he noted that the institutions today have moved beyond that mindset, which was Bitcoin first. According to him, XRP is not a competitor trying to replace Bitcoin. It is a network designed to perform tasks Bitcoin was never intended to handle. Because Bitcoin's honestly only purpose was to disrupt the financial sector, which it achieved already. There's nothing left for Bitcoin to achieve. He stressed that XRP fills a gap that becomes more evident as financial markets move towards real-time cross-border settlements. In an interview, David Schwartz emphasized that engineering decisions that set XRP apart from such competing chains. He mentioned that XRP was not forked from Bitcoin, does not use proof of work, and introduced major capabilities before these features were standardized across the industry. The issued asset and a native decentralized exchange, for example, Schwartz categorized essentially XRP Ledger as a suite of curated essentially financial tools built as an efficient means to settle, move assets, and provide liquidity. Schwartz emphasized that XRP's benefits from every new development within its ecosystem. He explained that XRP pays network fees, serves as the asset everyone can hold, and functions as the automatic bridge for routing trades. Most users, he said, do not realize how often XRP moves behind the scenes when stablecoins, liquidity pools, or tokenized assets interact on the ledger. Just want to repeat that one more time for anybody at the back that may not have heard just what I said. Most users, he said, David Schwartz, do not realize how often XRP moves behind the scenes. Most people don't realize how much XRP moves behind the scenes when stablecoins, liquidity pools, or tokenized assets interact on the ledger. Looking ahead, David Schwartz predicted that blockchain will begin replacing core components of traditional finance within the coming years. He mentioned that lending, cross-border transfers, retail banking, and investment products will increasingly operate on-chain. In this transition, he described XRP as a neutral settlement asset capable of moving value quickly across borders or linking jurisdictions and do not share a common financial standard. He said the structural role gives XRP a place in emerging global system that Bitcoin alone cannot fulfill. I agree with him 1 billion%. Bitcoin already achieved what it needed to achieve to stop the financial sector. It's now time for Bitcoin to pass the torch on to other financial projects. There's a reason why we got a multitude of ETFs coming up, because Wall Street is fed up with Bitcoin and Ethereum ETFs. They want alternatives. If Bitcoin was the king and remained the king, there was no need for interest of other ETFs inside of Wall Street, to be fairly honest. Why would companies go out of their way to fill multiple ETFs or other blockchains if Bitcoin was the king, is going to remain the king forever? What's the need of the other ETFs? There shouldn't be any interest whatsoever. But there is interest, there's appetite for other big projects out there. Because it's time for them to pass the torch. On that note, in terms of XRP, Ripple is the clear winner. Ripple, XRP here, everybody else here in terms of the financial sector and the things that Ripple can achieve and other foundations, other blockchain projects cannot achieve. We have come to the endings of tonight's live. This was episode 409 of the CMF Live. CMF stands for Crypto Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m., long time onwards. The most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the vital information you should know about regarding the world completely transforming into a digital sector. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Smash the like buttons and the retweet buttons if you already haven't CMF members, and if you watch this on YouTube, smash the like buttons as well. If you followed or subscribed during this live, thank you so much as well. Before we do go, obviously, let's go start the comment section first, and then we will call it a night. So let's see where we're at inside the comment section before we do go. We were here, I think. Like previous guys, let's go. I will definitely begin banking with Ripple once it becomes a bank. Yes, 100% agree. Question: banks adopting RippleNet, not buying XRP. Incorrect. Regarding essentially institutions that are essentially, I mean, for example, Travelex, essentially Trivago, essentially uses XRP in terms of transactions. Look, people can argue essentially who essentially is using essentially XRP ledger, or who's using XRP as a banking sector. Sorry, people can argue the amount of volume that's essentially being used inside the banking sector regarding XRP, but you cannot debate on the side of there's actually use case for XRP, because there is use case for XRP inside the banking sector, that it is happening. You can debate the amount of volume that's being used, but you can't debate if nobody's using it in any sort of way. Not saying you're saying that necessarily, because most likely you've heard that inside the crypto sector. But regarding the RippleNet as well, if you go to Ripple's own website on the blog section, they talk about RippleNet and how the XRP ledger is actually going to be connected to RippleNet. If you didn't know that, now you know. It's on Ripple's own website. Bye-bye meme coins, bye-bye USDT, bye-bye Poo coins. I agree 100%. The more we go into regulations, the more filtration is going to be happening inside the crypto sector. Night, Miles and CMF. Joe, see you tomorrow same time as usual. Good night, Miles and all the CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow same time as usual. Thanks, Miles. Good night, all. Let's go, Stormy. See you tomorrow same time as usual. Good night, Miles and CMF. Have a great night and see you tomorrow. Mike, have a great night as well, brother. See you tomorrow same time as usual. Great life. Take care, Miles and CMF. Ray, see you tomorrow, brother, same time as usual as well. Great news for XRP holders. Thanks, Miles. Have a great night and see you tomorrow same time. Let's go, Autistic. See you tomorrow same time as usual as well. Good night, Miles and CMF. Thanks for essentially a great live. We'll see you tomorrow. Free forever. See you tomorrow same time as usual. Thank you, Miles and CMF family. Have a great night. So let's go, Carlos. See you tomorrow same time as usual as well. Thanks for the update, Miles. Can't wait for this banking license as well to see what services they will offer for retail. See you all tomorrow, CMF. Let's go, Shelly. See you tomorrow same time as usual as well. Good night, Miles, and thank you for a wonderful evening today and every day. See you tomorrow night. Funky Butter, see you tomorrow, same time as usual as well. Like, comment, follow, subscribe, share if you already haven't. If you have, thank you so much. Put comments outside the live as well on X, and also put comments outside the live on YouTube as well. If you have, thank you so much. If you haven't, drop a comment. I will be seeing everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world, CMF members. See you tomorrow for episode 410 of the CMF Live. Love you all. See you all tomorrow, same time as usual.